Pablo, good to see you. How you doing? How you been? Comatose, good to see you. How you doing? How you been? Free and Feather, good to see you. How you doing? How you been? Good evening, Miles and CMF. Let's go. How you doing? Seeing you is a gift. Monica, thank you so much for the kind words. Good to see you as well. How you doing? Hi, Miles. Hope your weekend was good. It was great, artistic. Good to see you. How you doing? How you been? Good day, Miles. How was your new year? It was great, Mike. It was actually good. I spent time with family. It was good. Mike, good to see you. How you doing? How you been, brother? How was your weekend, Mike? Dennis, good to see you as well. How you doing? How you been? Hi, Miles of CMF. Let's go. Honestly, it's good to be back. I missed doing the live. I missed all of you, and I missed doing the live as well. And a lot of things have been happening during this week that I, essentially didn't do the live due to the Persian New Year's and the essentially weekend being a part of that. But a lot of things have happened regarding tariffs, regarding a lot of manufacturing happening inside the United States of America. A lot of countries caved in, a lot of companies caved into Trump's demands. And regarding, essentially the Fed, we're going to go through on tonight's live as well. Regarding the Ripple case, we're going to go on essentially on tonight's live as well. And obviously the new tariffs that have been imposed, we're going to go through on tonight's live, which ironically didn't really have a very bad impact inside the market space, which could be two reasons. One, the market space is becoming more resilient towards tariff scenarios. Or two, the market didn't see as much of an effective tariff scenario to feel any sort of down pressure. But we're also going to go through on tonight's live regarding Standard Chartered Bank's perspectives come out. So there's a lot of perspective needs to go through. Also, a lot of essentially what's going to be happening inside the United States moving forward. Countries that have caved in essentially to United States plans regarding Trump's plans. Trump trying to make America, obviously the capital of cryptocurrencies. CEO perspectives on matters of that. Regarding Fed Jerome Powell, we're going to go through Standard Chartered Bank. We're going to go through on tonight's live as well. A lot of things to essentially talk about, and one of the most important ones being a perspective that's come out regarding Bitcoin's category. It seems like they're shifting the category of Bitcoin from digital gold to digital to a safe haven, from that category to a tech stock, basically, is what they're essentially referring to Bitcoin now, which is interesting to see as well. Even Miles of CMF, Joe, good to see you as well. How you doing? How you been, Joe? Thompson, good to see you as well. How you doing? How you been? Good evening, Miles of CMF. Bullock Soapy, good to see you as well. How you doing? How you been? So let's start off the live show. We'll do the intro, disclaimer, and by that time, everyone's tuned in for session for the first part. Welcome to the CMF Live. If you're watching this for the first time ever, this is episode 284 of the CMF Live. And in this live, I always talk about the most recent news happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world completely transforming into a digital space. We also do Q&As on this live as well, which means if you ever do have any questions, put it down in the comment section. I'll be more than happy to help you out. And the disclaimer of this live is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So welcome to the CMF Live. If you're watching this for the first time ever, and if you're regular, let's go CMF. By the way, thank you so much to everyone who has liked this live from the CMF, because I'm getting notifications right now. Thanks so much to everyone who's liked this live from the CMF, who's put a comment outside the live, who's also hashtag the XRP and like each of those comments on X if you're watching this on X. If you're watching this on YouTube, thank you so much to everyone who's also dropped a like and dropped a comment outside the live as well. Now, let's go inside the comment section first, and then we'll go straight into the first news on tonight's live. And the first news essentially being about the tariffs, which is the new imposed tariffs we're going to go through right now. So let's go through the comment section first. Evening, Miles and CMF. Joe, good to see you. How you doing? Thompson, good to see you. How you doing? Bullock Soapy, good evening, Miles and CMF. Good to see you as well. Bullock Soapy, how you been? Evening, Miles and CMF. Pierce, good to see you as well. How you doing? How you been? Now, first news on tonight's live is regarding Trump, regarding tariffs, and regarding Venezuela. So here it is. This is how they're describing it on the news. These shocking tariff threats. Trump imposes a 25% strike on Venezuelan oil and gas, and it sparks global trade warfares. The ever unpredictable world of international trade has been thrown into another curveball. The current US President Donald Trump, known as for his trade policies that's going on right now, is back in the headlines, and this time it's with a potentially threat aimed at Venezuela's vital energy sector. According to a post on financial news platform, essentially by Walter Bloomberg, Trump has declared his intentions to slap a hefty 25% tariff on any nation daring to purchase oil or gas from Venezuela. Now, this should have caused turbulence like usual tariff news does inside the crypto market space for about a few days, but it really didn't. The announcement delivered via social media is characteristically blunt and impactful. A 25% tariff essentially is not a mere slap on the wrist, it's a significant economic barrier designed to deter international trade. But why Venezuela and why now? To understand this, essentially, we need to unpack the geopolitical context and the history of US and Venezuela's relationship. Targeting Venezuelan lifeline. Venezuela's economy is heavily reliant on its oil and gas reserves. These essentially exports are crucial sources of revenue for the entire nation, which has been grappling and essentially with economic hardships and political instability for years. Escalating pressures, this tariff threat appears to be essentially a continuation of the US's policies applying pressure on Venezuelan essentially government. Previous administrations have also used sanctions and economic measures towards essentially influence the political movements of Venezuela. Global essentially movements, the implementations of this tariff situation extended far beyond just Venezuela. Countries that currently import oil and gas from Venezuela will need to reassess essentially their energy strategies, potentially leading to shifts in essentially global energy flows and pricing. Regarding this entire scenario, what is this trying to achieve is relying on America for oil and gas and not relying on Venezuela. And any country that does purchase essentially from Venezuela is going to be heavily taxed. The interesting part about this news is crypto wasn't affected as much. At first, when the tariff news were coming out, essentially Trump tariffing China, the crypto market took a hit because the stock market took a hit. Then news came out a little bit after that, Mexico getting tariffed. News came out a little bit after that, Canada getting tariffed, and so on and so on. And the crypto market was taking hits essentially left, right, and center. Now, all of a sudden, the crypto market is becoming resilient because the Venezuelan tariff scenario didn't really impact the market space. Could be one scenario. The other scenario is the market space couldn't care less about Venezuela getting tariffed. But in my opinion, they should have, because it's still a big scenario, but it's a good thing, obviously, because it does show that we are becoming more resilient towards tariff news. And people are starting to realize that tariffs might not actually be a bad thing. So regarding essentially the potential benefits, increased pressure on Venezuela, the most direct intended benefit is to further squeeze the Venezuelan economy, potentially weakening their current regime and pushing for political change. Shifting global energy demands by making essentially Venezuelan oil and gas less attractive, the US could essentially be aiming to redirect their global demands towards other energy producers, potentially benefiting US allies or domestic essentially energy productions. And assaulting the US influence, such a bold move reinforces the US's role as the major player when it comes to global trade and its willingness to use economic tools to achieve foreign policy goals. Donald Trump's threats to impose a 25% tariff on countries buying oil and gas from Venezuela is a very bold move that has sent ripples through global energy markets and international political circles. Venezuela essentially, while the intended impact might be a very high pressure on Venezuela and reshape global energy flows, the reality is likely to be essentially far more nuanced. The risk of accelerating trade tensions, the potential economic essentially disruptions, and the humanitarian essentially implications are all significant factors of this play. And the world essentially watches to see if this threat materializes if the policy. One thing is clear, that the saga of global trade, political trades, is far from over, and the volatility essentially is almost certainly on the horizon. But in reality, it really, really isn't, because the crypto market didn't react in a negative way when the Venezuelan essentially tariff situation hit. It got some sort of a stubbornness, but it decided to move forward instead. Previously, As we all saw, the Chinese tariff situation caused volatility inside the crypto space for about 46 hours or 48 hours. Then we had the Canadian situation with tariffs, and that caused about 48 hours essentially turbulence inside the market space. Then Mexico's tariffs caused some turbulence inside the market space as well. And you fast forward through all these tariff scenarios, and you now fast forward to Venezuela today getting impacted by 25% tax on anybody that purchases oil and gas from them. Crypto market didn't really see it as a negative. It could be a sign of that we are seeing resilience regarding the crypto matter because it's not impacting us as much. Now, the interesting part is the countries that this tax is going to affect, this tariff situation is going to affect, are countries like China, for example. China buys, well, a lot of essentially oil and gas from Venezuela. So China has been a significant buyer of Venezuelan oil, and reports indicate that China has been the largest consumer of Venezuelan oil exports. So because the only reason I'm telling you regarding China being one of the major players, or even other countries, Spain, India, Russia, Singapore, Vietnam, and the list goes on, of countries that are buying essentially oil from Venezuela. The only reason I'm telling you this is because if anybody is out there thinking maybe because Venezuelan news isn't that too much of a big impact for the crypto space, but if you look at the list of countries that are buying oil from Venezuela, Venezuela is a big deal. But the crypto market stayed resilient, which is an interesting factor for the first time ever. And it could be a sign that the crypto market is maturing, and we're starting to realize that maybe tariffs aren't a bad thing, because in reality, they're really not. Now, because it's short-term volatility, long-term prosperity, it just works out in the long term by a mile. Also, this is like two birds, one stone for Trump, because putting this type of pressure on Venezuela makes other countries not relying on Venezuela for oil and gas and purchasing from the United States instead. His favorite motto is drill, drill, baby, which we can tell is definitely going to be working out. Now, moving on essentially from the tariff news to Bitcoin. Now, for the past week or so, or even longer, I've been stating that Bitcoin maxis have lied to people up to a certain extent. Everybody lies inside, not everybody lies inside the crypto space, but a majority of people do lie inside the crypto space to make their own crypto project or the crypto token they support look even better than it is. And when it came to Bitcoin, it was unfortunately the category Bitcoin was always put in by Bitcoin maxis or even high-profile executives and CEOs around the world. And the categories they've always given to Bitcoin is a safe haven. And I said it doesn't react like a safe haven. They said Bitcoin is a digital gold. And I also said it doesn't react like gold, because when gold goes up, Bitcoin unfortunately goes down. When two countries go to war, gold goes up, which is a safe haven, which is a risk-off asset, which is actual gold. And then Bitcoin goes down, because it's not a safe haven, because it's not a risk-off asset, and because it's not digital gold. Interesting enough, you fast forward to today where you're seeing this. Bitcoin's role as a tech stock in today's market. The category they're putting Bitcoin now in is that it's a tech stock. Bitcoin is not a safe haven or a digital gold or a risk-off asset. Bitcoin is just a tech stock. So a report from essentially Standard Chartered Bank has came out that said Bitcoin may behave more like a technology stock than an actual digital gold. Highlighting Bitcoin's high correlation with the Nasdaq, the report indicates that it can serve essentially as an alternative investment even during periods of financial stability. However, it notes that Bitcoin is increasingly reflecting characteristics akin to a stock rather than a digital gold or a safe haven. Interesting enough. And also, the report emphasizes that Bitcoin has shown performance similar to that of stocks rather than gold. It mentions that potential for gold to act as a hedge during financial crisis, although such as needs are not frequently observed. Bitcoin could be considered an alternative asset to investment portfolios against traditional financial systems, but it still doesn't react like one properly. Now, Jeff Kendrick, the advisor essentially from Standard Chartered Bank, said investors may view Bitcoin as both a hedge against traditional finance and a part of a tech disruption is the category they're going to put it in, a tech stock. The report suggests that alternative structures for incorporating Bitcoin into tech-focused portfolios. A process is creating essentially a Mag 7B index that includes Bitcoin instead of Tesla, which could provide optimized returns for lower volatility. Jeff also went on to say Bitcoin should be seen as serving multiple purposes in investors' portfolios. Opening the doors for more institutional purchases could also be a possibility as well. And other asset managers recommend allocating up to 2% of portfolios to Bitcoin for diversification. Institutions like BlackRock obviously are one of their essentially biggest ETFs market spaces, and investors consider the risk and return balance in their portfolios is crucial. And that elevating Bitcoin's tech stock characteristics for street planning, essentially, this approach could present potential risk reducing measures that might attract institutional investors, especially during financial stability. And based on the report's insights, increasing diversity in investment strategies and maintaining portfolio balance can be visible. The indicators reviewed may allow investors to reassess their current essentially asset distributions, thereby supporting a decision-making purposes even during uncertain market periods. The main factor to take away from this is, finally, it's not just me who's coming out and saying, or people like me coming out and saying, look, the categories they're giving Bitcoin is not really the category it should be in, which is safe haven, digital gold, risk of asset. It doesn't belong in any of those categories because it doesn't react like one of those categories. So it's nice to see a very high profile seat from Standard Chartered Bank, who also was a big supporter and still is a big supporter of Bitcoin. Standard Chartered Bank's essentially advisors or executives are still very big supporters of Bitcoin. They still see it as an incredible asset. But they're finally admitting that it's not really a digital gold, it's not really a risk off asset, it's not really a safe haven, it's more like a tech stock on the stock market. It is honestly nice to see that somebody in a very, very high profile seat finally admitting to the truth. That's the Bitcoin maxis have been lying to everybody for a long time. Because I said this even a week back. I said if China attacks Taiwan, what happens to Bitcoin? Bitcoin goes down. What happens to gold? Gold goes up. Why does gold go up and Bitcoin go down if China attacks Taiwan? Because that is a real risk-off asset rather than Bitcoin. So it's obviously nice to see somebody on a high-profile seat coming out and reassuring people that that was a lie and this is really the truth. Now, what we're going to be talking about next is insider sources speaking out about cryptocurrency developments that Donald Trump hinted before at. Before we go through that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'm more than happy to answer the questions you may have. So let's go inside the comment section first before we go for the next news. Evening, Miles and family. Hope you all had a great weekend. Ian, good to see you. How you doing? How you been? Could the 2nd of April be a buy the news event? Yes, in a way. So 2nd of April is going to be when the heavily introduced variants of tariffs are going to be introduced by Trump's administration or Trump himself. So the entire world is going to feel the pressure of America regarding tariffs April 2nd. Now, April 2nd will obviously cause some sort of market turbulence or essentially disruptions. It should do in a reality. And then if it does, it will create an incredible buying opportunity. The interesting factor about 2nd of April is by the time we're reaching essentially the 2nd of April, a lot of countries are adjusting themselves to Trump's policies, believe it or not, which we're going to go through on tonight's live a little bit later on. But a lot of countries and companies are adjusting themselves to this news regarding the 2nd of April, regarding the massive amounts of tariffs that are going to be imposed pretty much on the list of countries that just goes on. Now, good evening, Miles of CMF. Kelly, good to see you. How you doing? How you been? Hi, Miles of CMF. George, good to see you. How you doing? How you been? Happy Pisces, good to see you. How you doing? How you been? Morning, Miles of CMF. Shelly, good to see you. Morning, how you been? Now, insider sources. Insider sources about cryptocurrencies. Developments that Donald Trump hinted before at. The White House is urging Senate leaders to bring Stablecoin bill, essentially the Genius Act, up for debate in the next Senate month. Now, we do know for a fact that the United States is obviously a little bit behind when it comes to rules and regulations for the crypto space, and they are trying their best as soon as possible to create a very structured foundation for the crypto space to be able to move forward on, so it's no longer a house of cards and gets impacted and crumbles. So, on that note, they are really trying to push for the first bill to be passed through, which is the Genius Act, which is for stablecoins. Legislation is aimed at the current, or essentially creating a regulatory framework for stablecoin payments, recently passed the Senate, essentially Banking Committee, by a vote of 18-6, making significant progress in defining essentially clear rules for digital assets. Majority Leader John, essentially, is expected to schedule the bill for consideration in the Senate coming up. But before it can become law, the Genius Act must also essentially pass the House of Representatives, where it will be essentially a part of the House's versions of stablecoin legislations, the Stablecoin Acts, which is also sponsored by reps like French Hill and Brian Still. And the Stablecoin Act is also set to be heard in the House of Financial Services Committee by essentially April 2nd. The White House hopes strong Senate support will streamline the legislative essentially process and avoid a lengthy conference committee process. Pressure is already building to pass the bill quickly and avoid a conference if possible. One crypto lobbyist told essentially Crypto in America, if Genius Act gets 70 votes, there'll be a huge pressure for the House to back down and pass the bill as is. And that pressure essentially is already building. So a perspective coming out from other politicians is that the Genius Act is going to pass through pretty much no matter what. And there's a lot of pressure building to get this passed. And if this passes, then the House has no choice but also to look the other way and pass it through. Despite the urgency, it remains unclear whether the House of Representatives will abandon this version of the bill in favor of the Senate. Bo Hinney, essentially executive director of the Presidential Task Force on Digital Assets, expressed optimism about the bill's timeline, noting that the stablecoin legislation could reach President Trump's desk within 2 months. So within 2 months, we should have our first genuine law bill passed by America, and the first essentially regulation being stablecoins can move forward inside the United States. Within 2 months, we should get our first bill, which is incredible news. Now, more on the good side of news for the crypto space is Kraken. Now, I also revealed to everybody about a couple of weeks back that companies like essentially Morgan Stanley, essentially Goldman Sachs, JP Morgan, Wall Street, or even Bank of America are lining up to help blockchain companies go public, is what I essentially revealed. And Wall Street essentially being, a sector that didn't want to touch the crypto space with a 10-foot pole changed their minds because they're realizing that blockchain is something that is going to happen. It is going to stay. And it's going to become bigger than ever. And America needs to stay at the forefront of this rather than behind it. So you essentially fast forward to this news today. Kraken taps Goldman Sachs and JP Morgan for $1 billion in debt rises ahead of its 2026 IPO. Kraken is working with Goldman Sachs and JP Morgan Chase to raise essentially up to $1 billion in debt ahead of its planned public listing in early 2026, according to Bloomberg. Talks are still early, but the two banks are already essentially speaking with other financial institutions and direct lenders to pull together the funds. One of the people essentially involved reportedly said the amount could end up being as low as $200 million, depending on how the lending and discussions play out. The debt raise essentially isn't for a day or two of operations. The money is meant to fund Kraken's expansion, not to plug any holes. The company is also essentially thinking about raising equity, along with the debt, but that's not still essentially undecided. And all essentially other terms, including the structure and the final essentially amount, may change before anything is finalized, essentially coming out of Bloomberg. Now, founded in 2011, the San Francisco-based company is officially called essentially Payward Inc. is run essentially by their CEOs, David essentially and Orridge, who are this co-essentially founders of Kraken. And Kraken wants to go public in the first quarter of 2026. The timeline follows a more open stance on crypto under President Donald Trump's essentially administration, which has relaxed enforcements by the United States regulators, clearing the way for crypto companies like Kraken to explore essentially their IPO. Now, Kraken is not the only one going IPO. A lot of companies, essentially blockchain companies, are going IPO, and Wall Street is prepared to help them out. Morgan Stanley is prepared to help them out. Goldman Sachs is prepared to help them out. Even essentially JP Morgan, who's not that fond of cryptocurrencies, ironically having crypto blockchain payment system, is also happy to help them out. Kraken has talked about going public for years, but earlier plans essentially were delayed by the crypto market crash and legal fights with the US SEC. In 2023, Kraken settled one case essentially with the SEC, though it essentially got sued again last year, and this time essentially accused of running unregistered security brokers. There were the same charges that the SEC filed against Coinbase, the biggest US crypto exchange, and Kraken thought about essentially this lawsuit, and obviously the lawsuit got dropped. Same way Coinbase got dropped, the same way the appeal essentially Ripple got dropped, because the SEC is a lot more pro-crypto since obviously Gary Gensler left. Now, since January 21st, the SEC has overruled its internal structure on cryptos, and the old crypto division was replaced by the essentially cyber and emerging technologies unit, as well as the crypto task force that will work with the people and the industries to help write new rules. The task force essentially findings have already shaped agency decisions, and the SEC cited its works when it was asked to pause the Binance case last month. The fight over whether crypto tokens are securities or commodities has cooled down in a massive way, and the SEC is not pushing that issue as hard as any essentially was previously with Gary Gensler's leadership. After the election, Robinhood also essentially resorted trading on Solana and Cardano in the US, and these were the tokens that had been dropped back in 2023 after the lawsuit suggested that they might also be securities as well. Now, just 3 weeks ago, the SEC clarified that meme coins are also not considered securities, and these are essentially joke coins that go viral online with no real utility. Donald Trump obviously launching his own versions of, with his family members, with his own version of essentially World Liberty Financial, has not been looked into by the SEC in any sort of review. If it does, it will most likely pass all their regulations. Now, the SEC has also closed cases tied to people and companies who supported Trump. On Thursday, the agency and Justin's son, a crypto investor who put $75 million into World Liberty Financial, jointly, essentially, for a pause in the legal case against them. And the day before, Gemini Trust, the crypto exchange owned by billionaire twins, said the SEC had closed their case, essentially without taking any sort of legal actions as well. And even with Gensler out, the SEC says it's not ignoring crime, to be fairly honest. The agency is now essentially talking with both industry players and the public about what kind of enforcement approach to use going forward, but fraud won't be left alone. Obviously, the SEC is still going to focus on actual fraud, but not essentially no longer going to be making up fraud as they go along. Now, Christopher, essentially, who's from the CFTC, an advisor from the CFTC, who used to run the Commodities Futures Trading Commission, said they're looking for the industry to return to a more traditional American way of the internet, which is to build things and break things and don't ask for permission, and ask for forgiveness instead of being sued into the ground. The most important factor about this essentially is that companies, blockchain companies, are being helped by JP Morgan, Morgan Stanley, Wall Street, Bank of America, that they're all actually willing to help blockchain companies go public. These are signs of extreme bullishness that institutions that didn't want to touch crypto platforms or crypto exchanges or crypto chains with a 10-foot pole are now lining up. As I said a few weeks back, they're lining up to help blockchain companies go public. And we've seen the first early signs of that, with Kraken being the first one to go public. America is really, really slowly becoming, or in a very fast way, is becoming essentially the capital of cryptocurrencies. It's heading that route, with institutions willing to help blockchain companies with a much more friendly, essentially, crypto approach from the administration, and also with a much more friendly approach from the SEC and CFTC. We're definitely seeing signs of that now. And also with the cases dropping. Now, it's not just that we're seeing signs in America regarding cryptocurrencies, regarding the essentially pro and the bullishness of crypto companies going public. We're also seeing signs of that happening in other places around the world as well. One of them essentially being Italy. One of the most biggest companies out there has decided to join the blockchain space, which is major news. And here it is. Revolutionizing digital identity, PwC Italy unveils a blockchain solution for the EU. In a groundbreaking move, bridging the gap between traditional finance and the world of blockchain, PricewaterhouseCoopers, PwC Italy, is stepping into the digital identity arena. For crypto enthusiasts and advocates of decentralized technology, this news signals a significant leap towards mainstream adoption when a company like PwC is joining the blockchain space. PwC Italy, in collaboration with SK Chain Advisors, is developing a cutting-edge digital identity product, especially essentially tailored for European Union citizens. But for what it makes this initiative truly stand out is its foundation, the blockchain-based World Mobile Chain. This isn't just another digital identity solution. It's a bold step towards empowering individuals with control over their personal data, built upon the World Mobile Chain, a layer 3 network operating on Coinbase's essential network base. Essentially, PwC's Italy products leverages the power of self-sovereign identity, which they're essentially calling it the SSI. In essence, the SSI flips the traditional model on its head. Instead of centralized authorities dictating their digital existence, you, the user, are at the helm. You manage your own credentials, you decide who gets the access to your information, and operate without being tethered to centralized providers. This resonates deeply with the core essentially basics of the blockchain community, which is decentralization and user empowerment. So PwC, a massive corporation, has come forward to create digital identities, joining the blockchain space. And the first step essentially being not payments or so on and so on. But the first step essentially being data and digital identity. And they want to give data back to the people. A massive centralized corporation wants to create a decentralized platform to give data back to the people. The breakdown of the user-centric control, SSI, puts you in charge, no more relying solely on governments or corporations to manage your identity. Instead, you can use PwC's platform for decentralization purposes. Enhance essentially security. Blockchain inherits security features like essentially cryptography, and it bolsters the safety of your digital credentials. Interoperability. Built for the EU, this solution aims for seamless cross-border digital interactions, a crucial aspect for a more unified European Union digital market space. And privacy preserving. You share only what's necessary, minimizing essentially data exposure and enhancing privacy, a critical essentially concern in today's age of the digital age essentially we're entering into. And the involvement of PwC, a global accounting and consulting giant, leads significant credibility to the blockchain-based digital identity space, traditionally associated with conventional financial and business practices. PwC's foray into this domain signals a much more maturing of blockchain technology and is essentially growing acceptance within established institutions. This partnership validates blockchain's potential, a firm of PwC structure, investing in blockchain for digital identity underscores the technology's real-world, essentially, usability, and it bridges traditional and crypto worlds together even better. It fosters collaboration and understanding between established businesses and the innovative blockchain sector, and accelerates essentially adoption as well. PwC's expertise and networks can help drive a wider adoption of blockchain-based digital identity solutions within the EU and beyond. And it also inspires essentially trust as well. PwC's reputation is rigorous, and compliance can help build trust in blockchain solutions and among businesses and governments. And this move by PwC Italy is not just about developing another product inside the blockchain space, it's about shaping the future of digital identity and paving the way for a much more wider blockchain adoption in critical sectors. And PwC's Italy's foray to blockchain-based digital identity for the EU is more than just a product development. And this initiative not only promises to enhance security efficiency within the EU, but also sets a compelling precedent for how traditional institutions can drive adoption in the blockchain space. And the journey towards a fully decentralized digital identity landscape is ongoing. But with each step like this, we move closer to a future where digital empowerment is not just a concept, but a reality. Look, it's incredible to see a company like PwC, a massive, giant company like PwC, entering the blockchain space, no doubt about it. PwC entering the data field, essentially being the number one category they're going to be entering first in, is also interesting, is an interesting play, but it makes sense due to being a massive consulting firm. Essentially, data would be the number one priority. What's also interesting is they didn't go with Chainlink, because a lot of mega corporations, when they want to tap into data, they go for Chainlink. This way around, they actually went for a crypto project that not many people would really go for, which is essentially one chain, essentially it's on Base's network. But what this does show is that, two, other EU companies out there, is that if a company like PwC can trust the blockchain for data purposes, it opens up doors to more European companies joining the blockchain space and adding essentially liquidity to the pot when it comes to the blockchain space. It adds reassurance to the blockchain space for more EU companies, honestly, to join this field. Now, moving off essentially PwC, massive leap inside the blockchain space, to the Fed. Now, the Fed has came out with a new perspective on regarding tariffs, yes or no this year, or how many tariffs we're going to possibly have this year. And they've always been slightly against, for some oddly reason, introducing cuts, interest cuts, for some oddly reason. I mean, we've heard, the Bank of England has done interest cuts. The EU has done cuts. Canada's bank has done cuts. Japan's central bank has done cuts. A lot of banks around the world, their centralized banks, have done cuts. But Jerome Powell, for some other reason, is just reluctant not to do it. And what we're going to go through next is essentially Trump's perspective and the Fed's perspective regarding essentially Fed's Bostic essentially perspective and Jerome Powell's perspective. But before we go through that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. I'm more than happy to answer any questions you may have. So let's go inside the comment section first before we do go through the next news, which is regarding Fed's rates, regarding interest rates, and are we going to get any whatsoever this year? Let's see where we were at. What's else good to see is how you doing, how you been. As I said previously, this is live, which means if you do have any questions, put it down. I read everybody's comments one by one. Greetings, Miles of CMF. Ray, good to see you, brother. How you doing? How you been? Lord JP Morgan, all hail. Let's go. How you doing? Greetings, Lena. Good to see you. How you doing? How you been? Greetings, Miles of CMF. Good to see you, Lena. How you doing? How you been? Good evening, Miles of CMF. Orphan, good to see you. How you doing? How you been? Pierce says, Miles, I've seen someone say that the bull market is nearly over, but the pump that's coming later this year, starting next year, is in fact the adoption kicking in and nothing to do with the normal bull run cycle. It's true up to a certain extent. So it goes, Alex, good to see you. How you doing? Hi, Miles of family. Good to see you. How you doing? Pierce, it goes back to what I said. So I said to everybody a long time ago, I said the second run we're going to be having essentially is not going to be essentially a normal cycle. It's going to be an institutional cycle. I've been saying this for a while. The next clientele entering the crypto space is going to be institutional clientele. Also, we're getting regulations, which is always the three ticks I've talked about regarding XRP. I said the case is one tick, one green light. Essentially, the regulations been a second green light, and adoption been a third green light. And I said they're all very possible, highly possible this year. Well, if regulation is kicking in for XRP, which is general regulation, it's also going to be kicking in for other crypto projects that have utility. That's why I said the decoupling situation is going to be happening. So it's true up to a certain extent. The timeline of it might not be so true, but in general, regarding next year being essentially the kick run for the adoption for essentially utility, this year is also for utility as well up to a certain extent. I mean, within 2 months, we're going to be getting the Genius Act passed, which is the first ever rules and regulations for stablecoins happening inside the United States. But in general, regarding the institutional adoption, regarding essentially, the next run being institutional run, it's true. The next one is going to be an institutional run, which I've been saying for the longest time. Next clientele into the market space is institutions. I said Crypto.com has prepared their platform for institutions. I said Kraken has prepared their platform for essentially institutions. Binance has prepared their platform. Coinbase has prepared their platform. Companies are going, essentially blockchain companies are going public. You can tell that. Morgan Stanley, JP Morgan, Citibank getting more involved inside the blockchain space. Bank of America's executives talking about essentially helping blockchain companies go public. Bank of America's CEO saying in the World Economic Forum that recently passed, banks are ready for blockchain. These are all the things I've been saying in the past, and not in the past, but in a few months that went past essentially. But yes. The next run is going to be institutional. The next one is going to be utility-wise. And this is why I said you don't want to be stuck in random tokens when essentially regulations kick in and you want to be in utility projects. This is what I've been saying for the longest time. Will interest cuts essentially deflate? Will interest cuts deflate purchasing power of the US? No, they wouldn't in any sort of a way. Obviously, it will cause volatility inside the markets, but they wouldn't cause essentially anything bad-wise. If the interest, essentially, one thing we do need to be making sure of is that if the interest cuts are too aggressive, then it could trigger a very bad, essentially, market maneuver which could cause recession fears once again in the market space. But if we get essentially multiple rate cuts happening and they're not too aggressive, it can actually ease the market space a lot better. Do you feel adoption is coming this year then, Miles? I do feel adoption is coming this year. I feel like the regulations are definitely coming in this year, so the adoption should slowly start kicking in. But also, if you go back to what I said a while ago as well, I said essentially 2025 is going to be essentially the market space going to the institutional market space. And then I said 2026, we're going to go even higher in terms of utility projects. 2027, we're going to go higher in terms of utility projects, and so on and so on. I said utility projects are just going to go higher and higher and higher after regulations. Well, my exact words as well last year and the beginning of this year. But yes, we should be getting some regulations to ease the market space for it to move forward into the utility sector. More like 2026 to 2030 while bank branches start disappearing. Well, we have to get prepared for that stage. It's not going to be 2027 and then the market just goes boom. There has to be some sort of maneuver beforehand so the market starts getting ready for that maneuver of going up. So it can't just be, essentially 2025, nothing, 2026, nothing, and 2027 just goes up. There has to be some sort of movement of 2025, it goes up. 2026, it goes up. And then 2027, it goes higher. 2028 goes higher, and so on and so on. So there has to be some sort of maneuver before. So gradual movement forward. Not just 2025, nothing, 2026, nothing, 2027 just goes through the sky. There has to be gradual movement before it. The gradual movement will be banks preparing themselves, institutions preparing themselves for their essentially liquidity situations. So there has to be gradual movement before it. It just wouldn't be 2025 nothing, 2026 nothing, 2027 just goes through the sky. So there has to be gradual movement before it. It's the liquidity factor. Banks, institutions getting prepared. You'll see that movement happening inside the market space. Hello to my sir. So more like 2027. Hello to my CMF. Sorry, I'm late. Math tutoring high seniors. Let's go, Scott. Good to see how you're doing, how you've been. More people have been commenting that retail purchases will not increase in price for XRP, that the two ledgers, retail and institutional. More people have been commenting that retail purchases will not increase the price of XRP, which is true. The retail section doesn't really have that much money and it's not coordinated in any sort of a way. The retail section could have a lot of purchasing power if it was coordinated. Unfortunately, the retail section will never be coordinated in a way the institutions are so coordinated together, for example. And it just shows you by how much stock they're holding of each other. For example, BlackRock is essentially holding stock of essentially of Grayscale, Grayscale holding of BlackRock, BlackRock holding of Morgan Stanley. And it's just one big loop when it comes to institutions in terms of coordination. The retail section can have tremendous power inside the market space, but we're not coordinated, and unfortunately will never be coordinated like the institutions. So it is true that essentially, the retail section won't be able to move the price of XRP in terms of purchasing power. However, the institutions will be able to do that. 100% institutions will be, and also banks will be able to do that as well, because they have all the capital, and that's why we want regulations to get their capital. Hello, Miles. How's everyone doing? I hope that your day and evening has gone well. Scott, good to see you. How you doing? How you been, brother? Share the live. Let's go, Scott. What's going on with XRP, Miles? In terms of bad or good, nothing bad happening. It's all been so far good. We're just waiting for the $125 million scenario to see which way it goes. Brad has said that he is, essentially capable of paying it, but why should he? Because the rest of the companies that essentially got to walk away free from the SEC didn't pay a single penny, which makes no sense for Ripple to pay $125 million, which also would be admitting to guilt. Thompson, good to see you. How you doing? How you been? Evening, Sir Miles. Crypto Cowboy, good to see you. How you doing? How you been? But yeah, nothing bad so far regarding except everything's amazing. Now, Fed. The Fed Bostic essentially sees only one rate cut in 2025 as Trump demands immediate action again. Trump wants rate cuts. The Fed, not so much. Raphael Bostic, the president of the Federal Reserve Bank of Atlanta, is backing away from the idea of 2 rate cuts this year. Now, he's saying there's likely going to be just 1 rate cut in 2025, and his reason is tariffs. Jerome Powell is just like essentially Bostic, the president of the Federal Reserve Bank of Atlanta. Jerome Powell and this person are both saying the reason why they're not doing rate cuts is tariffs, which is the dumbest thing to date. I think they're getting the information from NBC, or they're just being stubborn. He thinks that the new tariffs are dragging out inflation and making it harder to bring prices down. That's pushing essentially everything back, including how long rates stay high, in an interview that was done on Bloomberg. Bostic said, I moved to one mainly because I think we're essentially going to see inflation very bumpy and not moving dramatically in a clear way to that essentially 2% target they're trying to aim for. Bostic now essentially expects inflation to hit that 2% target somewhere in 2027. That's even later than what the Fed officials thought, which was September, when they were aiming for 2026. It's now in line with the most recent Fed forecasts. And the central bank also said last week that it still sees a half-point rate cut this year. That's meant 2 cuts of 25 basis points. Some as the December forecast, same as December forecast, but that's just the median. A closer look shows more officials now expect either only 1 cut or no cuts this year. While Bostic is holding off, Trump is waiting. Trump has pushed the Fed again today to slash interest rates. He brought it up during a cabinet meeting, essentially saying, generally, prices are coming down and energy prices are coming down. And I hope the Fed essentially lowers the interest rates and they get to see interest rates coming down. Last week, Trump also posted online that the Fed should start cutting rates now. He argued that if the Fed doesn't act fast, his planned tariffs will hit harder. He's not bluffing either. His team is getting ready to roll out a new wave of tariffs on April 2nd. So, do you know what I said to everybody? That Canada, Mexico, and China are playing a game of chicken with Trump. It's basically what's going on. And I said essentially China, Mexico, and Canada are playing a game of chicken with Trump. They think Trump is bluffing regarding April 2nd and the extreme tariffs that are going to be essentially put in place for a lot of jurisdictions around the world. And I said the longer essentially Canada goes down this route of trying to pretend they have any sort of authority or power over the United States, which is the biggest market space on the planet, that it's going to end very bad for Canada. It's also going to end very bad for Mexico and China and so on and so on. The list just goes on. Other countries that think they could go up against the US and they're going to win in this tariff battle. And the reality it is they're not going to. It's either their countries are going to essentially feel the pressure and have a massive recession scenario, or it's the United States that's going to get impacted on a much more longer, essentially decade type of scenario. But if the US goes down, everybody goes down. If Canada goes down, then Canada goes down. If China goes down, then China goes down. If Mexico goes down, then Mexico goes down. They're essentially playing a long game of chicken to see who can outlast who. But the reality of it is, the United States can outlast everybody regarding tariffs. And not only that, if the United States ever goes into a recession and gets impacted on a massive scale, then the whole world goes into a recession. As the International Monetary Fund put it, if the American markets sneeze, the world market catches a cold. So this game of chicken is useless that Canada, Mexico, China, or any other countries playing with the US. Now, why am I bringing this up again? Well, because for some reason, Jerome Powell is playing chicken with Trump. The Fed chairman, Jerome Powell, hates Trump. We all know this. The Fed chairman, Jerome Powell, hates Trump. Trump doesn't like Jerome Powell either. And they both pretend, you know, they like each other up to a certain extent. But they both hate each other because Jerome Powell is seen useless in Trump's eyes. And, well, Jerome Powell just doesn't like Trump. In my essentially opinion, as I said previously, Jerome Powell is like Gary Gensler. And also, in my opinion, Trump, regarding tariffs, is a great idea. And I'll explain a little bit later on what I mean by a great idea regarding tariffs. But Jerome Powell is playing chicken with Trump. Trump said he's not bluffing. April 2nd comes around, heavy tariffs are going to be coming through. And if the Fed doesn't cut the rates by April 2nd, then America is going to get hit hard, but so is the rest of the world. And if America gets hit hard, it's because of Jerome Powell for not doing the rate cuts. And you know what's going to happen? If Jerome Powell doesn't do rate cuts, April 2nd comes, and we know for a fact Trump is not bluffing. then America is going to get hit hard, and Jerome Powell is going to come out and say, well, it's Trump's fault. And in reality, it isn't, because it's his job to do the rate cuts. But for some oddly reason, he's willing to crash economies after economies. If he crashes the American economy over time, that will cause a ripple effect for the entire world to go into a recession, because we rely on their market space, which means Jerome Powell is genuinely playing chicken with the entire world and Trump. Who put this moron in charge again? Jerome Powell, the Fed chairman, said these tariffs are already hanging over the Fed's economic forecast. The whole situation is now a tug of war. Trump wants fast rate cuts before tariffs go live 2nd of April, because that will ease the pressure on America if we have rate cuts before April 2nd. Bostic and others at the Fed are stalling essentially and waiting for inflation to drop. If you want inflation to drop, you do rate cuts, which is your job. You don't watch to hope for the inflation to drop. Jerome Powell spoke last week too. He said the Fed will stay on hold for now. He also repeated that the economy is still on a solid ground, even though consumer sentiment isn't exactly great. And Jerome Powell also said the price jump from tariffs should be temporary, which is true. Tariffs are temporary. Facts. But you can still ease it for the American market space. That's his words. Yes, the same words that the Fed used during the pandemic that turned out to be dead wrong. That's what making essentially this whole situation thing a lot more weird. They're using words that they've used before again. And it means something different this time. Jerome Powell and others are also ignoring recent University of Michigan's surveys. So the University of Michigan also did some sort of scenario of tariffs, and that should there be rate cuts. And the University of Michigan came to the conclusion that there should be rate cuts in America to ease regarding the American population, regarding spending purchases, regarding the market space in general. We should be having rate cuts, is what the University essentially of Michigan said as well, regarding the surveys. But Jerome Powell is also rejecting that survey. They're rejecting the university's paper regarding tariffs. Those showed long-term inflation expectations going up, but Jerome Powell brushed that off. Jerome Powell couldn't care less about the paper that came out regarding there should be rate cuts coming out of a university. He said other inflation indicators haven't really moved, so he's not worried in any sort of a way. Bostic doesn't sound too confident either. He admitted that this inflation problem is messy and not moving the way essentially they want it, because they're being pushed back. I think the appropriate path for policy is also going to be pushed back essentially in getting us to neutral levels. He said, so don't expect any fast changes to be happening. He also talked about the impact of tariffs, and Bostic said that tariffs usually cause a one-time price spike. But has now essentially, it could be a lot more worse, and inflation has already been high, so people are more sensitive now. We've just gone through a period of elevated inflation, so it's very much of the consumer mind. But Bostic said, I fear that they might be more sensitive to higher prices today, and that they have been in the past. But they might not, and we'll just have to see how it plays out. And another thing about Bostic said is that any in the future moves of the Fed might have to be bigger than usual. Since they're on a pause now, the next adjustments may need to be more aggressive. So if the Fed is going to pause and just watch from the sidelines regarding everything that's happening regarding tariffs, and just watching American lives go down the drain is what the Fed is planning on doing to make Trump look bad on purpose. The United States president and a university report is saying that we should be doing tariffs to ease regarding American public. Jerome Powell wants to sit on the sidelines and watch that entire thing go down the toilet. So then essentially they could come on the news on CNBC and NBC and say, well, Trump caused the American market space to crash. Trump caused essentially to create harder lives for the American citizens, when all of this could essentially be fixed by a simple rate cut, which Jerome Powell is not doing. And he's rejected all the data. He just brushed it off. He said, no, I believe in what I see, not what the data is telling me. It reminds me of Gary Gensler. when the judges essentially came out and said XRP is not a security. And then the news reporter came up to Gary Gensler and said, what do you think about the judge's opinion? Gary Gensler said, I don't care about the judge's opinion. I care about my own. Back in February, Bostic essentially already said rates need to stay restrictive until inflation comes down more. And at least weeks policy meetings, the Feds decided to slow down how fast it's shrinking its balance sheets. Starting in April, they'll let only $5 billion in treasuries roll off each month instead of $25 billion. That's a big change in the pace of essentially quantum tightening. Bostic supports that. He wants that the wind to down to just continue slow until it's time to stop it completely. And is not in favor of speeding it up again later. Bostic also said he's open to selling off the Fed's mortgage-backed securities, but only if it won't mess up. That's the part that they're still just essentially thinking about, but not decided anything yet on. Why should the interest rates lower? Why should we lower the interest rates? Well, President Trump's essentially immediate attention on interest rates regarding cuts reflects a valid concern about the economy's potential of vulnerability. By lowering rates, the Federal Reserve could essentially create a better economic activity, making borrowing cheaper for businesses and consumers. And this could also lead to increased investments, job creation, and overall economic growth. Lower interest rates will also ease the burden of debt, making it more essentially manageable for individuals and corporations inside of America. And this is particularly important in a climate where tariffs could increase costs and potentially slowing economic momentum. And furthermore, by cutting rates, the Fed could mitigate the negative impacts of these tariffs, preventing them from triggering a significant economic downturn. The argument that inflation will be essentially transitionary once the tariffs take effect is a gamble, is what essentially the Fed chairman is doing. Jerome Powell is taking a gamble on American lives and the world, you could even say up to a certain extent, because the American market space, as the International Monetary Fund put it, if the American market space sneezes, the world market catches a cold. Jerome Powell is gambling everybody's lives because that's how much genuinely this man hates Trump, that he's willing to gamble on everyone's lives. And if this thing goes south, because Trump isn't backing down, and Jerome Powell doesn't want to do rate cuts, so he's not backing down either, they're essentially gambling American lives. But Trump is doing this to create more jobs in America, to bring manufacturing back to the US. And Jerome Powell is just doing it out of spite. And the argument of that inflation will essentially be transitioning once the tariffs take effect is a gamble. A essentially proactive reduction in the rates now could serve as an insurance policy if we have rate cuts now before April 2nd. Such a move could bolster consumer confidence and ensure that the economy remains robust, even in the face of potential trade-related disruptions. Additionally, lower interest rates essentially could also help the United States maintain its competitive edge in the global economy. Many other nations are already implementing accommodative essentially monetary policies, and the US risk is falling behind if it doesn't follow in suit. As I said, Bank of England did rate cuts. The Central Bank of the European Union did rate cuts. Canada's bank did rate cuts. Japan's bank did rate cuts. South Korea's bank did rate cuts. And it just goes on of the list of centralized banks that did rate cuts. Jerome Powell doesn't want to do that. And therefore, the Fed should act swiftly to cut interest rates, ensuring a healthy and prosperous economic future. Now, interestingly, the last part, essentially, that I read out to you of why should the interest come down? Why should Jerome Powell do his job and do rate cuts? That is what I got from AI. When I put the news of Jerome Powell doesn't want to do rate cuts, how bad could it go? Well, Gemini, which is Google's AI, said, very bad. Which effectively shows, and in the words of essentially Gemini, Jerome Powell is gambling everybody's lives. And we know the reason why, because he hates Trump. He hates the man so much, he's willing to gamble on everyone's lives. And when April 2nd comes around, tariffs get introduced on a large scale, everybody's going to feel the pressure around the world, and America will feel the pressure as well, even more, but so will everybody else, because he won't do rate cuts, because Jerome Powell doesn't want to do rate cuts on purpose. And then the news is going to come out, NBC, CNBC, The View, or whatever, they're all going to come out and say, we told you Trump is bad for the economy, we told you he's going to put pressure on the American citizens, and so on. And they're going to twist the hell out of it. But not a single news channel is going to tell you why you felt the pressure. And it wasn't because of the tariffs. It was really because of Jerome Powell didn't want to do rate cuts. Tariffs will cause pressure, but the pressure that Jerome Powell is going to cause by not doing rate cuts is going to be worse. And that's where the issue lies. And regarding essentially, tariff scenarios, and regarding essentially, are they bad, are they good for the market space? Well, there's been a multitude, essentially, of companies coming back to the US, which we're going to go through a little bit later on tonight's live regarding that scenario as well. But now, moving off Jerome Powell being an absolute child to this, the SEC roundtable. So recently we had an SEC sit down, an SEC roundtable, and the SEC afterwards had some of their own discussions of how they're going to move forward inside the crypto space. Because obviously now they're pro-crypto. They're no longer essentially negative or against crypto in any sort of a way. They're pro-crypto. And we have the bullet points essentially of what was discussed and what's going to be taking action regarding the SEC moving forward. Before we go through any of that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it outside the comment section. I'm more than happy to answer any questions you may have. So let's go inside the comment section first before we go through the next news, which is regarding the SEC, regarding roundtables as well. Thompson, how you doing? Good to see you. Evening, Sir Miles, Crypto Cowboy, good to see you. How you doing? How you been? But isn't the $125 million peanuts in front of the XRP market cap? How can it able to affect the price from going up? The $125 million is peanuts, correct? How's that going to affect the price of XRP's market cap? It really wouldn't. And how can it able to be affect the price going up? It shouldn't in any sort of way. The $125 million that Ripple has to pay out to the SEC due to the Judge Torres essentially of XRP sort institutions in a certain time period was considered security, and that's where the $125 million lies. It really is peanuts to Ripple. They can pay it 100%. And is that going to affect Ripple's market cap paying $125 million? Not really. It might cause some sort of down pressure, but also might cause some sort of bullish pressure as well, because now we're fully moving away and it's finished and done and dusted. But the reason why Ripple doesn't want to pay it is because, well, nobody else has to pay any fines. And that's everybody else got to walk away free. Because, for example, the Kraken case, they said Solana is a security, Filecoin is a security, Avalanche is a security. And there's a list of tokens from every exchange that was a security by the SEC's essentially accounts from Gary Gensler. And that once those cases got dropped, when the Coinbase case got dropped, Kraken case got dropped, Crypto.com case got dropped, and all these cases got dropped one by one, the tokens that were considered securities in their cases also are no longer securities. So why does XRP have to pay essentially, why does Ripple have to pay $125 million on the basis of, they sold securities when nothing else is a security? So how can that is in that certain time period? XRP itself, in and of itself, is not a security. Just when it was being sold to institutions at that certain time period, it was considered by Judge Torres. That's why it's a 50-50 scenario. But in general, what Ripple's trying to do is say, we're not paying it because it doesn't make sense. Everybody got to walk away free scot. We want to walk away free scot as well. But also, based on your question, the $125 million is peanuts, correct, for Ripple to pay that money. And it will cause zero damage to the market cap of XRP. If they did pay it, it will cause zero damage. And yeah, most certainly, yes, Thompson. Imagine playing chicken or trying to call a bluff against Trump. Crazy work, bro. Well put. Facts. Honestly, any country out there that's really trying to play chicken with Trump, bad idea. Really bad idea. Canada is a losing battle, which is, yes, it is absolutely foolish for Canada. I'm a Canadian myself. Let's go, Thompson. How is the Fed chairman appointed, Miles? Elections? No, the president essentially is chosen. The president chooses. The administration chooses, gets voted in, and then essentially elected. opinion on Polkadot ETF possibility. Is Polkadot going to get an ETF? The possibility of it is quite high, actually, because there's been a few institutions out there that have applied for a Polkadot ETF, which I've also read out on this live as well a few weeks back, if I'm not mistaken. But yeah, Polkadot also has ETF applications in place as well. Hi, Miles of CMF. Daisy, good to see you as well. How you doing? How you been? How's things? Can Trump get rid of Jerome Powell? Can he get rid of Jerome Powell? He's tried. He has tried to get rid of Jerome Powell. But they did come to some sort of a conclusion, essentially, way back. But for some reason, Jerome Powell is still holding some sort of grudge. I mean, even when the voting season was happening for Trump, Trump did say multiple times he would get rid of Jerome Powell. And, news channels did question Jerome Powell and say, what do you think about Trump saying he wants to get rid of you? And Jerome Powell was saying, he can't do that and so on and so on, based on some legislation. But if it comes to that stage where they actually have to remove him in some sort of a way, they'll find a way to remove him. There's always a loophole in every law. Sorry, I'm late. I hope you had a great weekend. We are seeing some gains today. Let's go, Peg. How you doing? How you been? Good to see you as well. Swiss did rate cuts as well. Yes, Swiss did rate cuts as well. Pretty much every centralized bank around the world has done rate cuts, except for Jerome Powell. He doesn't want to do them. Now, the SEC roundtable. What was talked inside of the meeting and what was talked outside of the meeting? The crypto roundtable highlights is what we're going to go through essentially right now. The crypto roundtable that the SEC did essentially, held recently, emphasized that regulatory clarity remains a very massive talking point still, and highlighting the ongoing uncertainties affecting digital assets and the landscape globally. This event essentially underscored significant regulatory confusion in the crypto essentially space, influencing investor confidence and shaping the future of compliance strategies and evolving essentially market dynamics. And the roundtable also essentially gathered industry leaders and government officials essentially to discuss regulatory challenges in cryptocurrency markets. And discussions also revealed that achieving clarity is still a very, very long journey, impacting the global crypto community. And that key stakeholders from the cryptocurrency space highlighted regulatory uncertainties despite efforts, no concrete resolution has emerged. And industry players continue to navigate these evolving regulations and their implementations. Market participants also expressed concerns over the ongoing regulatory essentially ambiguity, and this uncertainty hampers institutional investments and hinders innovation, with many seeking clearer guidance on compliance, and potential outcomes include increased scrutiny on crypto ventures. And historical data indicates that prolonged regulatory uncertainty could limit market growth. And observers essentially call for consistent frameworks across jurisdictions to drive industry confidence. And past attempts at shaping crypto regulations have resulted essentially in mixed approaches globally. And similar discussions have previously yielded limited progress affecting industry pace and innovation. And experts essentially from Current Coin suggest that sustained ambiguity might stifle technological essential advancements, and insights draw from historical regulatory patterns, emphasizing the need for unified legal standards to support sustainable market evolution. Now, Hester Pierce, the SEC commissioner, who's also in charge of the crypto task force that was pretty much created overnight when Gary Gensler left, she said, I'm looking forward to drawing on the expertise of public and developing a workable regulatory framework for crypto. And at the roundtable are essentially the important parts of our engagements with the public and essentially crypto firms going forward. So the SEC, regarding their essentially crypto roundtable, came to the conclusion that there is still many struggles inside the crypto space in America, that they still don't have clear rules and regulations. They got an idea of which way to look into and which way essentially they should be, on which regulations they should be working out first so that the institutions can move forward and so that the banks can start utilizing cryptocurrencies moving forward as well. But it's nice to see the SEC doing crypto roundtables, something that they were never done before. And we're definitely going to be seeing a lot more SEC crypto roundtables, also a lot more crypto blockchain events happening with executives and politicians attending them and doing speeches and bringing that positivity for the crypto space, especially inside the United States, which is ranking 11th in terms of how far they've come inside the crypto space. And America's trying to go to first place. Now, moving on from the SEC and their positivity for the crypto space, and they've come to the conclusion of which sector they should be looking into in terms of regulations to make things move faster, is Hong Kong. So while the SEC and CFTC are still trying to build that foundation for the crypto space, it's no longer a house of cards. Hong Kong has came forward and said that China is actually preparing itself to re-enter the crypto market space. So here is what's come out. Hong Kong's ETF issuer, Hashkey, Capital CEO Chao Ding, says the Asian country is looking into Web3 and crypto and might reconsider its stance on digital currencies. The Asian country is referring to is China. Although crypto is banned in China, the government greenlit the use of blockchain technology recently. And in a recent interview with CNBC, Chao Ding said that Hong Kong is a gateway to the Chinese, essentially mainland, often serving as a testing ground for the country's new financial and technology innovations. Now, this is something that I and a lot of other people did say in the past, that essentially Hong Kong is where China does all of its testings before they implement anything for themselves. And it's nice to see a massive CEO coming out from Hong Kong saying, yes, China has been using Hong Kong as a test playground for blockchain innovation, and to see what they want to essentially bring into their own jurisdictions. And Hong Kong is always used as the lab for experiments, said this CEO. Either in essentially economics or new industries or sectors, Deng Chao said, and he noted that discussions with regulators have revealed there is essentially an effort to utilize the one country, essentially two systems framework to explore crypto and Web3 applications. China was once the world's essentially powerhouse when it came to the crypto trading and mining essentially infrastructure, with yuan-based transactions accumulating for 80% of the global Bitcoin volume before a regulatory crackdown began in 2013. However, 4 years later, authorities essentially completely tightened restrictions and banning domestic crypto exchanges, initially coin offerings, essentially ICOs, and events promoting essentially digital assets. After Donald Trump won the November 2024 US elections, Chao Ding said that China shifted its stance from hostile to supportive when it comes to cryptocurrencies. He said, with the Trump administration and the new administration essentially support, the regulatory framework will be more clearer. And so now the institutions, endowments, financial institutions, and high net worth individuals feel comfortable getting into Web3 and crypto space in a more regulated and compliant way, the CEO reckoned. Goes back to what I also said a while ago, which was if America essentially goes forward with becoming the capital of cryptocurrencies, creating a crypto stockpile, and so on, and bringing in regulations, trying to aim for that capital of cryptocurrencies, I said the rest of the world's market spaces will follow. And essentially what happened is China has realized that if America's genuinely aiming for the capital of cryptocurrencies and Trump is the one to lead them there, then obviously China, being the biggest competitor to the American market space, doesn't want to get left behind. Wherefore, they're also trying to now open their doors, which means a lot of capital will be flowing inside the market space from China's market space as well. And especially now that America does have a Bitcoin and a digital stockpile, essentially a crypto portfolio, which makes it even better, because then China should be aiming for certain crypto assets that are inside of that digital stockpile, including their Bitcoin. China's central bank does not recognize cryptocurrencies as of now as legal tender in any sort of a way, and regulators have not passed formal legislations outlawing it essentially entirely as well. And the 2013 government circular on Bitcoin had classified it essentially as a virtual commodity rather than a currency, allowing citizens to trade at their own risk. Regulations take a longer time than the industry expects, and it's always essentially the case in all these nuanced industries. This also is already a very important message to the industry, that the US regulator will be followed by other regulators, same as Europe, in Asia, and here in Singapore and Hong Kong, Deng Chao said. According to also another CEO of essentially a Hong Kong company, Red Date Technology, essentially, some conversations with financial regulators that change the heart might be coming soon from China. He said, I see some signal from financial regulators, he said, They're beginning to talk about Bitcoin and other cryptocurrencies, and they're saying we need to pay more attention and do more research on digital assets, is the conclusion China is coming up to. 2 years ago, he believed China had zero chance of lifting its crypto restrictions. 2 years ago, in these CEOs' perspectives, China had zero chance of entering back inside the crypto space. Now, these CEOs from Hong Kong are coming out and saying they estimate that the chance has went from 0 to 50%, and it's going higher. Decentralized betting marketplaces like Polymarket also placed odds of essentially China on banning crypto or Bitcoin and so on by the end of March at a 0% chance, and it fell from 21% back in December, essentially 2024. And then told CNBC that a successful implementation of digital asset regulations in Hong Kong could influence the mainland stance. So if China sees Hong Kong is doing well in the blockchain space with all their ETFs, essentially their regulations coming out and handing out licensings, and essentially Hong Kong's economy starts doing better and better as it goes along, they're saying China's going to be the next one to bring their capital to the table. And that's, if it's successful, I think there is going to be a possibility that China's mainland government will reconsider their stance towards crypto and Web3 industries and enter the fields. And Hashkey's Capitals essentially also secured a Type 1 license from the Hong Kong Securities recently as well, which is great for them, honestly. And the firm already holds a Type 9 license as well. They've expanded a lot more. And the Type 1 capabilities enhances our capabilities and provides significant value to investors, said Vion Wang. The biggest takeaway about this is something that I said a while ago, which was America, biggest market space on the planet. As long as much as people want to say online, you know, nobody cares, because I see a lot of comments, not on my, obviously, not on my lives, essentially any lives that I do, or essentially any posts that I do, but I see online regarding essentially CNBC, NBC, CNN, and, you know, essentially Fox News and so on. I see a lot of comments under it, and then just back to back, this exact same comment, which is, nobody cares about America. America's not the biggest market space. You know, essentially China doesn't care about America. The EU doesn't care about America. Nobody needs the US. Nobody needs Trump, and so on and so on. And these people don't realize that they're being fed BS by the favorite news channels. Because in reality, America is the market space that you want to be in. It's the biggest market space on the planet, and every country relies on America. Whether essentially people understand this or not, a fact is a fact. It's the biggest market space is America. And whatever steps America takes, the rest of the world will follow in suit, is what I said a while ago. And I said if America becomes essentially heads towards that title of, you know, the capital of cryptocurrencies, I said the rest of the world will follow their footsteps. As if America creates a digital, you know, stockpile or crypto portfolio, the rest of the world will follow their footsteps. And China, who completely banned crypto assets, is now reconsidering to come back inside the field. 2 years ago, in China's words, zero chance of entering the crypto space. When America had Biden as the president and Biden's administration of circus freaks. 2 years ago, China said, no, we're not entering the crypto space. Who cares? Because America wasn't interested. You fast forward to a Trump presidency, America wants to become the capital of cryptocurrencies. China, who was not interested, zero chance, to now interested. And they're researching blockchain once again. They want to open their doors to blockchain, which adds a lot of capital to the table because they're also one of the biggest market spaces on the planet. But America obviously being the biggest. But yeah, everybody eventually follows Trump's footsteps, no matter what. Now, regarding essentially the tariff situation, as I said, and I said, essentially tariffs are not what people presume. They're not bad. They're actually great in the long term. America lost a lot of its essentially manufacturing to other countries around the world, mostly towards China. You know, manufacturing companies inside the US closed up shop and decided to go abroad because it was much more cheaper in terms of employees and cheaper materials and so on. And they were easier, essentially pushing out more, if it was a car manufacturer, more cars, if it was food manufacturing, more food and so on, at a much more cheaper rate and boosting up their profits, which also at the same time made a lot of Americans jobless. But what Trump is trying to do is bring back manufacturing to the US by imposing those tariffs, but also imposing tariffs to stop fentanyl. imposing tariffs to stop essentially people crossing the border illegally. There's multiple reasons of why he's imposing tariffs, and they're all valid reasons, which is ironic why a lot of people in South America, not a lot of people, but there are some groups of people in America who hate the idea of Trump imposing essentially tariffs because it's going to ruin America, and instead it's actually going to create more jobs. And there's also the group of people that hate Elon Musk, which also makes no sense as well, because that man is trying to bring out the corruption inside the markets, inside the American politicians. The level of corruption in politicians is crazy. A while ago, interestingly enough, if you told people that essentially there are too many politicians and they do absolutely nothing, people around you will say, yeah, there's too many politicians, they do absolutely nothing. The world hasn't become better as it progressed forward. The world become a much more worse place as it progressed forward. And that we have so many politicians that do absolutely jack squat, that just go to work, get paid, and go home. Some of them don't even turn up to work. They just sit at home and get paid from taxpayers' money. And if you told people a while ago regarding that, they said there was too many politicians and they achieve absolutely nothing, and there's too much corporation inside the government, everybody would have said, yeah, there is. And now that we have somebody in charge looking into politicians, finding the corruption and firing them for doing absolutely nothing since the day they entered into politicians, people are against it. It's a very weird world we live in. Honestly, when one man, Elon Musk, decided to take time out of his extremely busy day of controlling billion-dollar companies and sending rockets to space, took time out of his day to look for that corruption that people have always been debating about regarding when it came to politicians. We know for a fact the majority of politicians are useless. I don't know why people are against politicians getting fired. The majority of them are useless. Everybody knows that. We have too many politicians and not enough is being done. Because with the amount of politicians we have, why isn't the world a better place? But instead, greed is at a high level. But staying on that topic, US trading partners and essentially scramble to avert before April 2nd. Now, this is what's happening regarding the rest of the world, because April 2nd is getting closer and closer, and heavy tariffs are going to be imposed. And now we're going to go through essentially what the rest of the world is preparing for, as in terms of which jurisdiction, which country is doing what before April 2nd happens. And a lot of them are scared. And some of them are playing chicken. So here it is. Countries hit by new US tariffs are scrambling to negotiate exemptions and make trade essentially concessions ahead of President Donald Trump's Liberation Day announced on April 2nd. So some countries have already came forward and started to, contact the Trump administration to have a sit down because they're scared of their country getting heavily, in terms of heavily tariffed. So some countries have already started to wave the white flag before April 2nd. Some countries are already waving the white flag of, where we want peace inside of this tariff scenario towards Trump. So good. Those countries have common sense. Any country waving the white flag to Trump has common sense. And you fast forward essentially to some other countries, for example. So moving on, the action meant to counter levies on essentially American products has sparked a fury of essentially by major US trading partners and governors across Europe, Asia, and North essentially America. And they're all scrambling to issue last-minute measures to avoid the once unthinkable economic plan. The European Union has contacted the United States. The European Union, who obviously has been coming on the news and saying, Trump can't scare us away. If he wants to impose tariffs, we will impose tariffs on the US, is the headlines we've been getting from CNN and NBC News and The View and so on, that have all been coming out and saying, the EU is standing strong against Trump. So why is the EU making phone calls to Trump's administration and pretty much begging them to not get tariffed? The EU trade chief essentially is set to meet with the US Commerce Secretary Howard Longton and trade representatives Jamieson Greener on Washington Tuesday, basically today. Remember, the EU was on the news for if the US wants to tariff us, then we will tariff them back. If Trump wants to play the tariff game, then we will play the tariff game with Trump. So why are they scrambling right before April 2nd? Why are they trying to make phone calls to Trump's administration and get an immediate sit down if they're so tough? So this is what I meant regarding why are these essentially, presidents or prime ministers around the world pretending to have any sort of power or authority, which in reality they don't. They could have waved the white flag a long time ago. We could have moved on from tariffs. But instead, they decided to put on this show for the news. But behind the scenes, they're begging. However, divisions also remain within the EU over how to respond. While France advocates for a firm stance against the US pressure, Italy is considered that escalating tensions could harm its economy. So there are smart individuals inside of essentially the European Union. There are smart countries inside the EU who are going, no, we're going to wave the white flag. We don't want none of this pressure from Trump or the US. And there are morons inside the EU who go, no, we're going to stand firm. Obviously, France standing firm shows the IQ level of Macron, which is pretty much nothing. Who also, in Candace Owens' words, is, sleeping with his own, India is also pursuing a diplomatic channel to obtain and essentially, not getting tariffed by Trump in any sort of a way. So India is also waving the white flag right before April 2nd. This week, a senior US delegation led by the Assistant Trade Representatives for South and Central Asia, Brendan Lynch, is scheduled to essentially visit India. This is the news that CNN will never tell people. CNN will never tell people that Trump's tariff policies are actually pressuring countries to bend the knee to Trump. CNN will never tell this. NBC News will never share this either. They'll just show fake news and brainwash people and say Trump is bad, tariffs are bad, the economy's bad, Trump is ruining everything. But what's actually happening is every country pretty much, well, the ones that have brain cells are lining up and waving the white flag already before April 2nd. And then talks will center on a possible essentially trade agreements with India, keen to persuade the US officials that its policies do not unfairly disadvantage American firms. So India wants to have a sit down and to essentially have a sit down with Trump's administration, if possible with Trump, to say that India isn't being unfair to Trump in any sort or to the US, and they want to work fairly with the US. Governments worldwide make trade essentially concessions aimed growing tariff pressure. As we're getting closer to April 2nd, that pressure is definitely growing for a lot of governments around the world. Governments worldwide are scrambling to find ways to bend the knee to the US and avert any such economic hits from new tariffs arriving April 2nd. The latest is salvo in accelerating trade conflicts. For example, the UK. The United Kingdom is essentially considering reducing or even repelling its digital service tax before April 2nd. The tax has drawn ire from the US, which claims it targets US tech behemoths like Google and Amazon. Apparently, in the US's words, or Trump's administration words, or even Trump's words, the UK has been taxing American companies heavily compared to American tech companies heavily compared to other tech companies in the United Kingdom. And then Trump said he doesn't like this. Why do American tech companies get taxed essentially higher? Why did they get tariffed higher than any other company inside the UK? That's not right. And the UK come to the conclusion of removing it and saying, yes, Trump is correct. We should not be, taxing these American companies at much more higher levels. We should be, such a tariff them at much more higher levels. We should be tariffing them the same levels as everybody else. Trump is right, is the conclusion the United Kingdom has come to before April 2nd. Meanwhile, Malaysia is adjusting its stance on semiconductor exports after US concerns over potential shipments of Nevada chips to China. The move is an effort to smooth Washington's fears about China's expanding technological might. So Malaysia was also selling American semiconductor chips to China when they shouldn't be in any sort of a way. And then also Malaysia has decided to bend the knee to Trump and say, we're no longer going to do that. We've never done that in any sort of a way. And we want to wave the white flag before April 2nd. Under pressure from US tariffs, Canada is also enacting emergency economic measures. Now, Canada is playing the tough role act, thinking they're going to outlast Trump. The Prime Minister, Mark, essentially, has announced temporary tariff reliefs for businesses, such as deferring corporate income and consumption tax payments, and these actions aim to protect Canadian companies from the cost of potential trade, essentially, conflicts with the US. And Trump's aggressive trade policies are causing many nations to rethink their international relationships as well. Spain, for example, while maintaining a strong trade ties with the US, is also trying to expand its economic outreach, and why shouldn't they? Prime Minister Pedro plans to visit China next month to meet President Xi Jinping. He also visits Vietnam, a sign of broader push for Asian economic essential relations. It wouldn't last too long. Financial leaders around the globe say that a trade war could slow economic growth and raise inflation. Despite this, the stock market in Asia, Europe, and the US gained today. Though there essentially was an element of caution attached. China is bracing for economic disruptions as well, as it expects more trade curbs. And Premier Lin Kuang had also essentially cautioned that Trump's tariffs could cause shocks that exceed expectations in remarks in China's development forum in Beijing. And Li also urged countries to expand their markets and step up corporations to essentially respond to economic uncertainties. And meanwhile, the US trade talks with China are ongoing. The US Trade Representatives is scheduled on Thursday to hold his first phone calls with these Chinese counterparts as both sides scramble to control the tensions. So, this is genuinely what the news won't tell you regarding the list of countries that I've just read out from the EU, from the Asian market space, and so on, that are actually waving the white flag to Trump. They're bending the knee to Trump. They've caved in already before April 2nd because they know that April 2nd comes around, they're going to get tariffed heavily, which would essentially over time cripple their economy if they move forward with this scenario. So a lot of countries are bending the knee, a lot of countries are waving the white flag, and it shows you that Trump does have power, which there was no doubting it. America is the biggest market space on the planet and does still have power and authority, which nobody should be doubting that either. These are signs of that. But again, CNN will never tell people. And on that scenario of tariffs, regarding a lot of people might still be out there and think tariffs are not helping people. Someone like me is lying to the people, and tariffs are not really helping people. America's not going to be helped by tariffs, but it is. Toyota decided to bring manufacturing back to the US. Lexus is also coming back. Honda's coming back. Hyundai is coming back. And this is just car manufacturers. SoftBank is investing $100 billion into the American market space. The amount of manufacturing that Rolls-Royce today announced they're coming back to the US for manufacturing because they don't want to be tariffs. Essentially, they don't want to be tariffed under the US essentially presidency either. The list of companies that are coming back to the US for manufacturing is tremendous. And all of this creates American jobs because America relied on imports. But why? Why should they do that when they can essentially bring everything back to America? Because America is relying on China essentially for imports that are coming in to their country. But American citizens should rely on their own country by creating those jobs for them. And Trump is essentially achieving that for them. And one of them essentially been today, for example, Hyundai. Hyundai has decided to invest $20 billion in the US. The investment highlights Hyundai's commitment to expanding its EU essentially footprint, potentially reshaping the US automotive market landscape as well. Hyundai will inject a substantial $20 billion into the American economy, focused on electric vehicle technology. This move allows essentially and follows global trends towards sustainable transportation solutions, and South Korean automakers' investment signifies an important shift towards reducing their carbon emissions. But most importantly, Hyundai is doing this. Why? Because they don't also want to get tariffs. The decision involves large-scale manufacturing expansions. Large-scale manufacturing expansions coming in from Hyundai to the United States. $20 billion they're investing. and could include developments of advanced EU essential infrastructures. And this aligns with the global trends towards sustainability as major automakers increase their focus on green technology and so on. And the investment is expected to create numerous jobs opportunities inside the United States, affecting positively on local economies. The automotive industry may see increased competition, spurring innovation and development. And this investment represents our commitment to expanding our manufacturing base in the US and supports the nation's transition to electric vehicles, said the chairman of Hyundai. And historically, such large investments in automotive sectors have proven transformative. An example includes the substantial growth following the previous infrastructure developments and alignments, and so on. So the only reason I showed you one example, and there are tremendous examples of the list of companies coming back to the US to create manufacturing jobs and create massive, essentially, factories, is tremendous. But again, CNN won't tell this to people, neither would NBC News and so on. And they just want to lie 24/7 and say tariffs are bad. Trump is damaging the US economy with tariffs. Everybody's going to become jobless with tariffs because of Trump. And in reality, it's a list of A to Z of manufacturers coming back to the US. And not just coming back, they're all spending $10 billion, $5 billion, $20 billion, $100 billion, and they're all coming back to the US. And this is extremely positive for the US economy as well, which also later on will add more capital towards the market space, stock and crypto. But I just wanted to share that with people to, open people's mindsets. And, as an example of the news, especially the news that, hates Trump, is full of BS. Full of BS. And they never report the truth. Not once. Now, moving on, essentially off tariffs, to Ripple. Ripple's CEO has came forward and said, and also relatable to Trump, has said that Trump is actually helping the crypto space, fixing the crypto space, opening doors for the crypto space, is what Ripple's CEO said, Brad. And he also said this: the US is finally unlocked. Ripple's CEO Brad Garlinghouse has told Fox Business that the company is seeing a change in domestic interest. Ripple, the company, is seeing a change in domestic interest. That means inside the US, there's a massive change happening, a positive change for the crypto space. He said the United States is finally unlocked. And I think that people are essentially underestimating how big that change is, he said. Also goes back to what I said, next clientele institutions with all the, Morgan Stanley, SEC, CFTC, CFPB, OCC, all of these essentially positivity that's come towards the crypto space is tremendous. It's immense. It's extremely positive news. And we're going to see that gradual movement coming in. But now going back to what he said. So he said the United States is finally unlocked. And I think that people are underestimating how big of a change this is. This comes after the US Securities Exchange Commission recently dropped, obviously, appeal against Ripple. And that the SEC, which was known for its hostile anti-stance towards crypto, changing their mind after Gary Gensler leaving. Why did they change their mind? Trump's administration, Trump's policies. The new SEC leadership quickly moved to drop the SAB 121 rule, for example, which made it much more challenging for banks and institutions to get involved inside the crypto space, which again was done by Gary Gensler, which has been removed. According to Brad, those banks that were essentially really hesitant and really nervous about touching crypto are leaning into it now. This is coming from Brad, the CEO of Ripple, saying America's a lot more pro-crypto domestically, and that more banks in America are leaning towards crypto now. And those are the same banks that were hesitant to touch the crypto space. The SEC also established a task force creating a clearer essential crypto regulation. And Brad Garlinghouse has stressed that the recent developments are a big deal for Ripple, as well as the broader industry. So why are banks, domestic banks inside of America, a big deal entering the market space? Well, you could tell Ripple is going to be working with. He said we will see the US finally start to catch up with the leadership we're seeing from other markets around the world, he said. Brad also said, and he also commented on the much talked about stablecoin bill, noting that it will be voted on within the next 4 to 8 weeks, earlier, essentially this month. He stated that the US stablecoin bill policy was on its way after the key bill passed the US Senate Banking Committee. And earlier, the Ripple boss essentially would routinely criticize the US for failing to catch up with other essentially pro-crypto jurisdictions, such as Japan, the UAE, and Singapore. The Ripple CEO has also recalled that XRP was recognized as a non-security by the federal judge in 2023. Obviously, he mentioned this once again on the news. It's always nice for him to mention it, which is the opposite of what the SEC was trying to argue. And he believes that the market structure bill, which will essentially define the legal status of various cryptocurrencies, will pass within the next 6 months. So according to Ripple, this year, according to CEO Brad, this year is the year of regulations. This year being the year of regulations will also make it that this year is the year of adoption. We can tell where that's going to go as well. And regulatory clarity will foster more innovation, more job creation, and more capital formation inside the US, according to Brad. So, CEO Brad goes on live news, tells the entire world that the reason why America domestically, American banks, American institutions are more pro-crypto, and he's seeing signs of that. And he said, in his words, finally, America is unlocked, is because of Trump. And in his own words, also, that this year is when we're going to be seeing the regulation market space for essentially the blockchain space, not just a stablecoin bill, but in general regulations. And if this year is going to be a year of regulations, we're going to see that gradual movement happening this year. And this is his words, Brad's words. And on that note of the positivity that's actually happening inside the crypto space behind the scenes, with the SEC doing roundtables, trying to find that fit-in space of which area to focus on, Trump's tariffs and policies are actually making countries wave the white flag before April 2nd. More jobs can be created in America as well. More capital should be coming in. China getting pressure to re-enter the market space, the crypto market space, because of America's market space, adding more capital towards the market space. And Brad essentially mentioning this positivity regarding essentially XRP, the banks coming in, it's actually in favor of Ripple, he said. And also other factors that we went through today regarding Standard Chartered Bank, saying for finally somebody very high profile seat coming out and saying Bitcoin is not really digital gold or safe haven or risk of asset. It's more like a tech stock, was essentially what was mentioned by Standard Chartered Bank, Jeff Kendrick. And on that note of the positivity that's actually happening inside the crypto space behind the scenes, and for the American tariff policies happening behind the scenes, also positive, we have come to the endings of tonight's live. This was episode essentially 284 of the CMF Live. If you're watching this for the first time ever, and you're wondering, what is this and who am I? My name is Miles. I go essentially by the persona of Crypto Miles, and I host the live that you're watching right now. You can tune into this live Monday to Friday, 11:25 p.m. GMT time, United Kingdom time, in other words, onwards. And I talk about the most recent news happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding how the world is transformed into a digital space. And the disclaimer of this live, as always, is not financial advice, no political advice, and whatever I say is only for entertainment purposes. And this was episode 284 of the CMF Live. We're on episode 284 right now, which is incredible. And by the way, thank you so much to honestly every single member of the CMF that liked this live on X. If you're watching this on X, thanks so much to everybody from the CMF who liked this live on X, who retweeted this live on X, put a comment on X, and liked each other's comments, and hashtag the XRP on me, essentially, in the comment section outside the live. And thanks so much to everyone on YouTube who liked this live as well, and put a comment outside the live. And thanks so much to everyone who followed me during this live. If you watch this on X, or subscribe to me on YouTube if you watch this on YouTube. But before we do go, let's go to the comment section first, and then we'll come to the endings. Let's see where we were. We were here. Is the Federal Reserve essential for the US, or can Trump get rid of it? No, it's essential. Ripple being in China for a while, that's true as well. China never got out of crypto, repressed it from its citizens to keep them poor. XDC is Chinese. Yes, up to a certain extent, yes, but they are actually using Hong Kong as a I agree with you, Mark, but they're also using Hong Kong as a playground as well. But I agree with you, yes. Even Miles and CMF, Manny, good to see you. How you doing? How you been? Sad reality that Canada will get the upside down pineapple, pretty much. Mark Canary has put in place to administer the 51st state. The transferring of all assets are happening now. Nothing at all on mainstream media is unreal. Let's go. Night, Miles and CMF. Pablo, good to see you tomorrow, same time as usual as well. Good night, Miles and family. Great live. Many thanks. See you tomorrow. Ian, see you tomorrow, same time as usual. 225. Can't wait. Gratitude. Let's go. Monica, see you tomorrow, same time as usual as well. Thanks, Miles. Good night, CMF. Daisy, see you tomorrow, same time as usual as well. Thank you, Miles, for all you do for us. Have a wonderful night. All Lena, see you tomorrow, same time as usual as well. Just once again, if you haven't, essentially, if you're watching this for the first time, or as if you're a CMF member, like, comment, share, retweet. If you haven't done already, CMF members. Good night, Miles. Thanks for all the day live. See you tomorrow. Free and forever. See you tomorrow, same time as usual. I'll see everybody tomorrow, same time as usual, for episode 285 of the CMF Live. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See everybody tomorrow, same time as usual. Like, comment, share, retweet.